When you choose to become your own banker, you are opting to fight that battle between yourself and between your own ears every day for the rest of your life. But that process is invaluable. That makes you think like two different people. One is a consumer. The entire approach that consumers have, we all have that anyways. The second is a business owner, and not just an owner of a business that other people are consuming from, but that you're consuming from. That forces you to take a hard look at every choice that you make, and you have to have two separate mindsets.
Week before last, I spent 3 days up in Des Moines, Iowa at the Iowa Ag Show. It's a farm and ranching show. And and a gentleman came into the booth. I had walked away, and he came in. It was on the last morning. He came in, and when I was coming up behind him, I could see that he was wearing the strap around his neck that is identical to the one I had to say that I'm a vendor. You know, it's got my name and all that. And I came up behind him, and I just asked him if he'd ever seen any of these books, because I had about 4, 5, 6 books out there, you know, about this concept. And he said yes, and he pointed to Nelson's book, Becoming Your Own Banker. He said, "Yep, I read that." And I said, "Did you implement it?" He said, "Yes." And I said, "How is it going?" And he said, "Well, I actually shut it down." And I was, "Why?" And he told me that the agent that had set this up for him left him with the impression that he was actually going to get the interest himself if he took a loan. And he went to take a loan, and he found out that actually the insurance company is going to get the interest, because, you know, you're taking it out of their general fund, just like any other banking function. And it really kind of upset him, ticked him off. Quite honestly, I think that was actually the word he might have used. And so he stopped the policy. He stopped funding it, and so did a reduced paid up. And and I said, "You still have it?" And he says, "Yes, I still have it." And I said, "Well, at least it's still growing. You're not even funding it, but it's still growing. And you can still use it. You know, you could take a loan against the cash value." And but I said, "So how long ago did you read the book?" He said, 10 years ago. And I said, "Well, I would encourage you to read that again. And if after you read it, to give me a call, and we'll talk about it." And so the next Saturday, I came home Thursday night. Saturday morning, I was still in my pajamas. The guy calls, this gentleman calls and asked me a question about the interest. You know, why would I take a loan from my policy or against the policy if the interest is 5% and my policy is only growing at 4%? You know, I think that's what he said, 4%. And I proceeded to try to explain it to him why you would want to do that. Number one, you're part owner of that insurance company, so you're putting back into a company that you have, you know, money into. You know, you put money into it, and so you're part owner. And so would you rather put it into your own banking system function, or would you rather give it to another banking system somewhere else? What would you do for that 1% difference? And he asked me a couple more questions, and I felt like I was really kind of bobbling it. You know, I wasn't really coming up with a real solid answer. I blame it on the fact that I was still half asleep, but that's a poor excuse.
The pajamas probably had something to do with that mental state you were in.
Yeah. I mean, I had not finished my first cup of coffee, and I always have 2 in the morning. But I just was kind of, I could feel it inside myself that I was bumbling that this guy's going to go away and say, oh, this is a bunch of BS. I'm not, it's not what I thought it was, blah, blah, blah. So we hung up. And then after we got off the phone and I started to wake up, I started thinking about it. I went, oh, geez, I should have said this. And this is that. So I ended up texting him this quick little message and just said, if you go to the grocery store story, you could say all kinds of stories about it, but in Nelson's book, because he ended up finding the book while we were on the phone call. He said, because I'm calling you because I can't find the book.
Oh, that's funny.
Yeah. 10 years ago is when he read it. So, he ended up finding it while we were talking. And I said, just read the grocery store story. It's only 2 pages. And on the second page, there's just one little thing that I want you to think about after you read it, is that Nelson wrote in there saying that, you have your customers and you're charging them, let's just say, I think he was charging 60 cents. The example was 60 cents for a can of peas. And that's what you're charging your customers that are coming in the front door. And, I'm not covering the whole story here. I don't think that we need to get into that. But I just wanted to make this point that he also mentions that, in fact, why don't you charge your captive audience, clients, which means your wife, your son, your daughter, your brothers and sisters, why don't you charge them 62 cents? And, somebody might think, well, is that fair? Just do that? Well, at least your own family, yes, because that 2 cents, and obviously there's some margin, profit margin in that 60 cents already, but the extra 2 cents for that one little can bolsters your whole grocery store system, if you want to call it that, because it is a system in that, if that grocery store is really successful, what do you think they're going to do? They're going to start another one somewhere else. Same thing here that we're talking about. So when you take a loan, so here's the first part. 5% is what the insurance, this is just an example because insurance companies are different. They have different rates that they're charging. But just as an example, his particular insurance company was charging him 5%. He's only getting 4 over here. So, okay, that's not a really big deal, but it is a big deal. Over time, it's a big deal. If you're going to play the borrower and the banker, which is what we're talking about, if you're sitting on the other side of the table and being the banker, what do you think that banker is going to charge you? He's not going to just say, oh, you can get this, you just pay this amount, and he's going to charge you an interest, right, for borrowing the money. So you have to act as the banker and the borrower, and it's it's a little mental gymnastics, but it can be done. People are doing it. So what I said to him was, when I take a loan, before I take the loan, I first figure out how and when and how much I'm going to pay back per month, per year, whatever I decide, because we have full control, right? We are the banker. So I told him, every time I take a loan, I charge myself 10%, which I think it's not crazy, but it's not just 5% to cover what it's not just 1% to make it even between the 5% from the insurance company and 5% with your policy. I charge myself 10. So if I pull up an amortization table and I look at it and I say, okay, I want to pay this $10,000 off in 3 years, just say 3 years. And it comes out to obviously 36 payments, and you plug in the 10% and it says, okay, it's this much a month if that's what you want to do. So at the end of the term, let's call it the term, end of the paying it back, somewhere around 33, payment 33, 34, whatever it is, it might be 32, just depends, right? It depends on how much interest you charge yourself. You charge yourself 12, it's going to pay that
Right.
loan back to the insurance company faster than you would if you just paid it back without that amortization table, without the extra interest. So you're going to end up with maybe 3 or 4 payments, just as an example. And but you're not going to stop once you've paid back the insurance company. You're not going to stop making those extra payments. The question is, where does that extra payment go? Well, I would put it off to the side in maybe a savings account, put it in a seed, make those 3 or 4 payments. You have that little extra money. Just say it was $300 a month. So say you had $1,200 extra. Take that $1,200. You might put it in a CD. You might put it in something else because you're not quite ready to start another policy. But the idea is that you're going to take another loan. You've paid back that loan. All the cash value has come back to you to use it again. And you've been paying premiums for 3 years. So that cash value is much bigger, much higher than it would have been otherwise. So say, okay, well, 3 years down the road, you've paid it off. You don't have to wait till you pay it off because obviously there could be more cash value in there to take another loan. But you have that cash value, you take another loan and you do the same thing. And at the end of that one, maybe you've got $1,500 or $2,000 or whatever it is. You build that up to the point where you say, this is enough. I can see where this is enough, but I could start maybe a policy on my 10-year-old boy or 8-year-old daughter, or maybe even a business partner or, whoever.
Yeah.
And that's really what I believe Nelson meant by talking about a system of banking system. All right. So just like the bank, they start with one bank, they grow, they become profitable, and then they say, well, we're going to set up a little branch in the next town. It's the same thing. When you start that second policy, it's like another branch. And if you look on, so the grocery store story is on page 15 and 16. If you look on page 26, you can see how he talks about this very thing as well there too. You could use all kinds of examples of instead of just a grocery store. And I guess I'm trying to do it with a bank, that the bank says, okay, we're profitable, let's start another branch. Well, every time you start another policy, that's another branch. If you're still working and your expenses may be going down, and what are you going to do with the money? Are you just going to spend it? You could put it, start it. Most people would just spend it,
Yeah,
that's what
it's
happens.
there.
Because it's there in your checking account. If you have it in your checking account, chances are it's going to find a home somewhere that's not really going to be advantageous necessarily. It might be fun for a little while, whatever it is.
Yeah.
New snowmobile if you live in Montana.
Could use that today. It's coming down.
Is it? Oh, geez.
Yeah.
Oh, boy. Yeah.
But you're right. You know what? That's the problem is where does it come from? A lot of folks are, when they come to me asking about infinite banking, they have a good idea of the theory because of reading Becoming Your Own Banker, watching videos, all that kind of stuff. They have a basic idea of the theory, and it's usually adequate. But one of the big questions that they ask is how do you access your money? And then I ask them a question. We go through the whole educational process that I take each of my clients through, and I ask them, okay, now we've got all of these great things about infinite banking. It's accessible. It's, you can access it through policy loans and all this other stuff, So I said, how long do you think it takes to apply for a policy loan? So what's the process?
Mm.
Just take that in your imagination. You know what I get almost every time? Uh, Probably about 30 minutes. Everyone's idea is about 30 minutes, right? And then they say, I was like, okay, perfect. And how long do you think it'll take the all of that to process? So you got 30 minutes of application time, and then you've got the whole processing. And they're always saying, probably 4 to 6 weeks. I was like, yep, that's what you'd expect from a typical financial institution. A 30-minute application takes a little while to get the money. And so my response to him, as I say, well, the way it works is you go online, you you log in, you say I've got this much available balance, you fill out how much you want, and you click the button. You say send me my money, and they do in less than 2 weeks. And they're every time they're like, what?
Yeah,
And
yeah, yeah.
it's so available to you, but to kind of wrap this back to what we were talking about, it's not as available as a piece of plastic swiping in any restaurant or any grocery store or any
Yeah.
sports store that you could think of, right? So you're protecting yourself from that immediate consumeristic perspective that we tend to live with,
Mm.
while at the same time maintaining that accessibility to do anything that you need to. I mean, really, do we have any big things that you need money faster than 2 weeks? Like really big things. I'm sure some things come up very, very, very occasionally, but
Yep.
by and large, you don't need a huge chunk of money in less than a week or two.
Right. Right. Yep.
Got to
Yeah.
protect ourselves.
Yeah. 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 And that, Kyle, that could be a whole other conversation, just about how we handle our own money, and that
Mm,
we have become a consumerist society. That's why it's not good to have it in your checking account.
I know.
And I think I actually talked about this in a video I made a long time ago, that uh, it that lag time, I'll call it lag time, the
Mm,
5 to 10 days or 3 to 10 days that it takes for the money to end up in your account. That amount of time can actually, before you pull the trigger on asking for it, you might think, do I really need this money? Do I really want to do this? And then, thinking about, do you ask your, or do you mention to your clients that, before you take the loan, you might want to consider how you're going to pay it back, because that is very important.
yeah,
Is
absolutely. Yeah.
Yeah. Um, and so setting that up to pay it back, to me, is almost, to me, I think of it in a positive way, is that it's incentivized savings
Mm.
that we're not normally necessarily doing. I mean, what is the statistic? Something like the average American saves maybe 3% or 4%, maybe.
Is that what it is right now?
I,
That's
I,
terrible.
yeah, I think we're like some of the lowest savers in the world. But anyway, yeah. So tell me more about what you asked them around this subject. Like, how do you talk about it?
You know what? I honestly could do a little bit better of a job walking through, like, set up a repayment plan for yourself with clients. Usually when a client approaches me um for a policy loan, they just like, hey, this is gonna be my first policy loan, this is what I'm thinking. We have a really thorough conversation around the whole thing. I think
Oh, okay.
having
Yeah.
ha- asking that specific question is like, what is your repayment plan? I don't usually phrase it exactly like that, because I have an idea of what they're thinking, how their process works or whatever. But I think that's a really good way to ask it. So I appreciate you saying that. That's one of the things I love about doing podcasts and talking with other practitioners is, you always find ways that you can improve. It's great, and my clients are going to be better for it.
Yeah. I want to say that I want to say thank you to the gentleman that came into my booth, because I really wasn't talking about this in the correct way, or I wasn't
Mm,
talking about it the way I'm talking about it this morning. He actually challenged my brain to really think this through. And now, I had read that grocery store story, and I had read this book so many times. I don't know what it was about his questioning that really caused my brain to go, like, it just kind of locked everything, all the pieces together in a way that now I'm like, I almost feel like as excited as I did when I first found out about becoming your own banker.
that's so awesome.
I just was like, what? How come I never talk about this? Because I said to myself or whatever, I said, I don't actually get into explaining it very well. Uh, but I guess I haven't been challenged.
Yeah. Yeah, no, that's always helpful. Being challenged in the thought process. That's one of the things I love about infinite banking is there's a lot of people who don't like it out there. There's a lot of people who think it's just hooey,
Yeah.
and it's just like, why are you going to be your own banker? Like, you're why would you ever pay yourself interest? All this stuff that just to them doesn't really make sense,
Yeah.
and all of that, every one of those conversations helps you to refine why it is important. And so the conversation, to go back to your question, how do I talk about this stuff with people? My challenge to everybody is what I tell people is tricks and gimmicks always um, tricks and gimmicks, they are short-lived. They're here today, they're gone tomorrow. But paradigms and the way that you think is something that lasts generations. And so what we're dealing with here, if you're going to take that 4% internal rate of return, I can't even believe I'm saying that. I hate that phrase. But let's just
Yeah.
say you got 4% growth in your policy and you've got 5% interest and you take a policy loan, you're losing 1% on your money. Okay, great. I totally understand that. But here here's the problem. That thinking is the thinking of a consumer. And if you are going to go to a grocery store and you could choose what you would pay for groceries, what would that be? Would it ever be the sticker price? No.
Right. Right.
What would the grocery store owner choose to charge you? Would it ever be the sticker price? No, it would be higher. So the consumer wants to pay less than, and the owner always wants to charge more than. And the sticker price is the happy medium. That's where everyone can agree.
Yeah.
When you choose to become your own banker, you are opting to fight that battle between yourself and between your own ears every day for the rest of your life. But that process is invaluable. That makes you think like two different people. One is a consumer. The entire approach that consumers have, we all have that anyways. The second is a business owner, and not just an owner of a business that other people are consuming from, but that you're consuming from. That forces you to take a hard look at every choice that you make. And you have to have two separate mindsets. You have to have the idea of a banker. And bankers, what is it? Their thought process is always, okay, I need to take my assets, I need to take I should say my liabilities, my money, and I need to make my money make money. It has to make a
Mm.
profit. Well, how do I do that? As a banker, I charge interest. Interest is defined as the price that you pay to borrow money or the return earned on an investment. That is the business of banking, is interest, right? That's the profits or
Yeah.
that's what generates the profits in banking. So if you're going to elect to own your own bank, then you have to think that way. You have to think, no matter who my consumer is, whether it's yours truly or the neighbor or the competitor, I am going to be an honest, profitable banking head. That's what you have to make that decision, right? So
Right.
a lot of folks come at it from this idea of arbitrage. Like, what's the difference between um, like there's a slight variation, 4% versus 5% or 4.5% versus 5%, and so I'm gonna make that 0.5%. That's a consumerist perspective,
Mm, yeah.
you know, and
Yep.
you're trying to exploit the system for every little thing that you can get out of it. That's not how bankers think. Bankers are thinking, how do I go make money with my money? And they recognize that if money is stagnant, like Nelson was talking at the very beginning of becoming your own banker, water has to flow. And if water doesn't flow, it becomes stagnant and gross and not usable. So it's the same thing with money. Money has to flow, and bankers are always pushing their money out to go flow. And
Right.
so you have to recognize that, and if you can't embrace that, do yourself a favor, don't ever buy an IBC policy. Don't ever
Yeah.
become your own banker.
Right. Yeah. Yeah. You have to get to the point where your brain, I wouldn't say that your brain necessarily has to get there 100%. It might get there 75, 80%, but you have that sense there's something here. I can feel it. I can sense it, but I don't have quite all of it, but I feel so good about this. Let's go, you
Mm,
know, because if you wait, that's time.
yep.
And time changes everything when it comes to compounding interest.
Yep.
You wait 10 months, like I had a client that came to me, didn't do anything for 10 months. And the cash value at 10 years, if I looked at both policies, 10 months when he first came to me and 10 months when he actually started, there was a $5,000 difference.
Ooh, wow.
And so time, what's the phrase? Something about time and money. I can't
Time
remember.
heals all wounds. No, I'm just kidding.
I don't know if that's true either.
Even $5,000 wounds.
Yeah.
uh,
Okay, so I got a question for you.
yeah.
You said I don't like that phrase about the ROI inside the policy. Can you tell me why you don't like that?
Yeah, and that's actually a great question for this particular topic, because um the people who don't do infinite banking, the people who have a problem with infinite banking, almost all, by and large, view becoming your own banker as just another way, tool or gimmick, of paying money for things, for stuff. Would
Hmm.
you agree with that?
Yeah. Yeah, I think,
Okay.
yeah. Yeah.
That's not what becoming your own banker is. And so people then ask me, like, well, what is it about then, right? If obviously it's in the title, becoming your own banker, but in order to really get into that, we have to explain what each of the components are. We've got money. What is money? Money is just a means of exchange. What does it exchange? Well, it exchanges value. Assets are things that put money in your pocket, and capital is the tradable value of those assets. So when you're becoming your own banker, the goal is not just paying money for stuff, because money is just a representation of some other value. What value are we representing? Becoming your own banker isn't even about paying money that is representing a good value or a good asset. It's about leveraging the capital of an asset so that you can maintain control, so that you can maintain access, so you can maintain protection, guaranteed growth, tax-free growth. Like, it's insane. And so all of this is what you should be embracing when you're going down the path of becoming your own banker. Is, how do I leverage a cash flowing asset to enact my will in my marketplace? Understanding there's always a cost for every single transaction. So what that you pay interest? That's good. You're a part owner of that insurance company.
Mhm.
When people ask about the internal rate of return or making sure you get a return on your investment and all this other kind of stuff, they're only thinking about what each dollar is going to be making them. That's all they're caring about. They completely forget about what the dollar represents. The dollar represents the asset. It represents the capital. And I'm sorry, but you're going to have a hard time finding a purer source of capital than you find with the cash value life insurance policy. So why are we even talking about an internal rate of return? What about the external rate of return? What about when you take that policy loan and you go throw it at a business, and that business 10x's in the first I have a client that did that.
Yeah.
His business exploded 10x within 1 year.
Wow.
How do you take that and calculate for it? So when we're focusing on the internal rate of return on the policy, we're only caring about the numbers, and the numbers are always going to change a little bit. We forget about everything related to power and capital. That's what infinite banking is about.
Yeah. Great explanation. Yeah. So the policy contract is a asset unlike any other asset that you'll have in your portfolio.
Yes. Very unlike.
It's completely different. There's nothing in your portfolio that's the same. I had this conversation just the other day. I went to see my it's tax time, right?
Yeah.
So I went to see the CPA, and we always get into this. The last few years since I got into this, we talk about it. And he was saying, why wouldn't I want to go buy a vacation home? And I said, well, I would suggest that you hold off on that vacation home, put the money, over maybe 5 years, put it into a policy, and then go buy the vacation home if that's what you want.
Mm-hmm.
And then you have two assets. You're going to pay that loan back, but you're not going to pay it to the bank down the street. You're going to pay it back into your banking system.
Mm-hmm.
The thing of it is that vacation home has risk that policy does not. That's huge.
Just
yeah,
one
go ahead.
thing.
Go ahead.
No,
that's just one thing. Yeah, that's just one thing. Yeah, he and I went round and round. He started talking about what I could put it in a money market, I could put it in a Roth IRA, I could do this, I could do that. I said, well, with Roth IRA, there's no death benefit, and the death benefit passes tax-free.
Another question: whose is that Roth IRA?
Yeah.
Look at the fine print. Look at the fine print on that.
Who's pulling the levers on that? Who's making the rules on that? Can they change them when they feel like it?
Yeah. Yep.
So it goes on and on and on. This is an asset unlike anything that you'll ever own. Wouldn't you like to have 20 of these?
Yeah, right. And then here's another one that actually comes up a lot. What if I just take my money and throw it at a investment property, and I get a renter in there, and I'm making $300-400 a month on that transaction? Great, that's awesome. You should go do that. I have a question for you. Which is these are two different classifications, okay? When you were saying in your portfolio, we've got life insurance as an asset, and we've got your investment property as an asset. One is capital, one is capitalizing an asset, and the other is investing, okay? An investment asset. So two different categories. Which one do you think is going to require more of your time? Which one is going to require more maintenance? Which one is going to have more expenses associated with it? Which one is going to require more oversight? Great. I'm not saying you shouldn't have, I'm not saying it's bad to have things that require all that. All of that's great. All I'm saying is an IVC policy requires nothing from you. Just pay the freaking premiums, and it does its thing. It's amazing. There's nothing like that.
Yeah. Boy, yeah, this is fun to talk about this. Yeah, the other thing is, what happens if that renter leaves and you can't find another one for 3 or 4 months? Who's
Oh,
paying that?
did your asset turn into a liability there for a very short amount of time?
Yeah.
Does the classification of a life insurance policy ever change? No. It is a capital accumulating asset, cash flowing every single month, every single year. And it
Yeah.
can
Yeah.
never go backwards no matter what happens to the market.
Yep. Yep.
What kind of
Yeah.
peace does that give you?
Right. It, so you were saying about the real estate, and I was too. Vacation home, or an investment, and so I just want to be clear that this is actually a capital asset that's great to use in tandem with real estate
Oh,
investing.
100%.
A lot of real estate investors have these policies, and
Mm-hmm.
they have, if they've been doing it for a while, 20 years or whatever, 10 years, they've got some cash in there for down payments all day long.
Yeah, and I appreciate you bringing that up because I can get real heated, obviously, about this topic. And the reason why is because our society is always pushing people into things they don't understand. If
Hmm.
you understand real estate, go do it, right? But if you don't understand real estate and you just want to make money, guys, it's not that easy. You know,
Right,
this
right.
is this. It's not that it's really easy to get an IBC policy. It's really easy to have a basic understanding of what infinite banking is. It takes a long time to learn how to become your own banker. We talked about this isn't about just paying money for stuff. I mean, you could even argue that investing is paying money for stuff. You take money out of your bank account or you take a loan from a bank or whatever and you go buy an investment property. Great. I mean, that's awesome. This is different. This is learning how to leverage an asset to
Right.
go put your will into force out there in the
Yeah.
marketplace. That's not easy. That takes time, right? You're going to have to do that quite a few times before you get good at it. But what infinite banking is that foundational piece. You can count
Yes.
on it. It's always going to
Yes.
be there and it's always going to be growing. You don't have to wonder if the renters are going to be good or bad. You don't have to wonder if something's going to be in your favor or against your favor at any given point. And so
Mm.
that allows people to learn what it is to do business. If you can learn how to become a banker, you can go do anything you want. You really can. Because that's the foundational piece to go do the other things.
Yes. Right. Yeah. The So what's the most powerful business in the world?
The most powerful banking.
Yeah.
Banking.
So who buys a lot of insurance products?
That's a great question. Bankers.
I, and who's the second? Who would you say is the second largest?
Yeah,
Corporations.
I was gonna say, are we gonna talk politicians or corporations? It would definitely be
Yeah.
definitely be
So
corporations.
so your bankers are telling you to give us your money and we'll invest it for you, because a lot of banks now have an investment arm. You know,
Yeah.
well, just think of Citibank and Fidelity and Prudential, all these banking
Mm-hmm.
uh, entities. So they're doing one thing with your money, but they're doing something different with their own.
Mm-hmm.
Where's the logic in that? You can go out and look and Google bank-owned life insurance, BOLI as they call it, right? You know that, and COLIs, and you can see at each one they'll lay it right out how much they own.
You think they is most of it term life insurance?
I believe I some of it would be term, but I think there's some whole life in there too, because um, they they use it as part of an executive's retirement package.
Yep. Well, it's not just that. You were mentioning you think there's whole life in there. It's not just whole life, okay? These are high cash value whole life
Right.
policies.
Right. Yes.
They
Yes.
use them for retirement packages, to fund pensions, to do all that kind of stuff, right?
Yep. 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 Yeah. So why wouldn't we do it?
I'll tell you why we wouldn't do it. Because you get a bad internal rate of return for the first 10 years on those life insurance policies.
I'm sorry. I shouldn't laugh.
No,
I
it's
should-
it's
I
it's
should.
totally accurate. It's like I'm gonna pay $50,000 a year for life insurance, and it's only gonna grow like 500, 600, 1,000, $2,000 this year. You're saying like
Yeah.
that's not very good. I could pay $50,000 and have it grow 5,000 in
Yeah.
my investments. Well, yeah, you totally could. But what happens in 30 years when you're not paying anything and your policy is growing by 70, 80, 90, $100,000 a year? How do you explain that? Like you're developing a business. I mean, you have to look at it like that. Nelson was so clear that we're capitalizing a bank. You're developing a business. The Japanese strategy: fund your business for 7 years, take the profits for the next 7 years and put them back into the business. And after 14 years, you can start taking profits for yourself. Guess who's pretty freaking wealthy? A lot of Japanese business people. They know how to do it, right?
Yeah.
And that
Yeah.
needs to be our philosophy when we're doing this. We can't be thinking this consumeristic approach to investing and
Yeah.
finance, which is, how do I make money tomorrow with my money? It's all about the long term and having access to capital now to go do other things while the long term is coming.
Yeah. 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 Thinking long term. We don't do it. I blame that on, I've always blamed it on McDonald's. When McDonald's came out, when I was a kid, when they first came to New Hampshire, when I living up in New Hampshire, when they first came to New Hampshire, we had to drive 10 miles down the road to go to this McDonald's. It was like a big deal, for us. You get the hamburger, the fries, and a drink for $1, and you get a nickel back. And it was fast. And everything from that point on was all about speed. Faster, faster, faster. It took away our own ability to think critically, in my opinion.
That's a great way to put that.
That and life is busy, right? But there are times when we should just slow down so that you can think.
Mm-hmm.
And you use the word philosophy. Perfect word. Everyone has a philosophy. But the question is it working for you or is it not?
That's it.
Is it not working, So
but
reconsider. Go ahead, I'm sorry.
No, you're right, but is it working for you or is it not? That can turn into a dangerous argument. And the reason why is because we can tend to look at our own success. Let's just say, like, I've got a guy who is interested in the infinite banking concept. He makes 500 grand a year, decent amount of money, right? And he's like, why would I borrow from myself? Same thing. Why would I borrow from myself when I could, or why would I take the time to build up an IBC policy rather than just taking this cash and throwing it into another business? Like, obviously, I've proven that I know how to do that, and it's working for me, and I'm making a lot of money. So why would I not continue doing that? That's a hard argument to make, right? Well, here's the rub. Everything, Nelson says this how many times in Becoming Your Own Banker? Everything you do in the financial world is compared to how everyone else is doing finances, right? It's not just comparing you to you. Yeah, you're doing great, but you compared to everybody else that's hard. I was just processing some information as I was talking, and you could be like, well, he's making 500 versus the guy who's making 50. He's obviously doing well. But what about you as a business person doing business this way compared to another business person who's doing business through the infinite banking method and making 500,000. Look at the difference in the way those two people approach life, and you thoroughly analyze everything. Which one is going to have wealthier children? Which one is going to have wealthier grandchildren? It's working right now. That's great. But what's the longevity of it?
Right, right. Yeah, this is almost segueing. My brain is almost segueing into another topic. Yeah, where at the end of your life, you were supposed to be thinking long term, but at the end of your working life or in your passing, how are you protecting your assets as you leave the planet, your estate plan?
Yeah.
Is the infinite banking tool that you could use to enhance that? Absolutely.
Yeah.
And that's what a lot of wealthy families do. Is they'll use it for that. There's so many reasons. The other thing is, so those businesses he started, will they last 20, 30, 40 years? Or will they die? And they'll stop bringing in income. I mean,
Yeah.
that's a possibility. The world changes so fast. I don't know what he's doing, but will it continue? Will he could jump to another
Yeah,
business.
absolutely. But here's the thing. He could, but let's just say he builds up this business. Gosh, I don't even. I'll just say what one of his multiple businesses is a trash business. Okay, and it's a very profitable business. He does very well in it, and he's got a great company, and it's great. But here's the thing: rules and regulations change all the time. What if the municipalities all of a sudden say, okay, trash can't be done this way anymore, this has to be done this way? All of a sudden, got to rethink. He's an entrepreneur, very good at rethinking. Fantastic. What if that happens when he's 75, 80 years old and doesn't care as much anymore and just wants his system to be operating? What is he going to do? Is he going to just shut the business? Because it's going to be harder for him to just sell the business if the whole business model has changed. Let's say he passes on and his kids take this thing from him. They've learned how he does business, but they haven't gone through this process of learning how to all of the inner workings of what it means to be an entrepreneur. Life hits them on the side of the head, and then they say, okay, well, shoot, I guess we'll just close it.
We'll sell it or whatever.
You sell it, shut it down. Who knows? Maybe they'll make a profit, but the cash flowing portion of that is significantly changed. Oh, because that, and it would change whether you're doing infinite banking or not. Okay, I'm not trying to argue that. All I'm trying to say is, all of a sudden you have less of that foundation, less of that capital to go facilitate some of these changes that have to take place. You have less of a buffer to handle some of these changes that need to take place. Yeah. So I don't know.
Yeah. Really good points. One other thought I had when you said something earlier was, what if the economy slows down, right? In other words, what if we have another 2008 or 1970s or whatever? And we will, because it's baked into the system. It's going to happen. And capital dries up in the sense that the banks pull back. And this gentleman, really smart entrepreneur, your client, has a policy, and he's had it for 10 years, and he's been funding it with, I don't know, just say 150, 200,000. And he sees his competitors falling off because they can't go to the bank and get cash to keep themselves going. And he's got all this cash over here, and he goes to them and says, I'll buy it from you. I'll pay this much. And he does. And then he's able to wait out the winds of the storm, so to speak. And when it comes back, he's all the more powerful. And
Yep.
over a certain amount of time, he's put all that money back into his policy to do it again.
Yeah. I was talking with a friend of mine who is another entrepreneur, and he was saying, man, it's so difficult right now. I'm at the point where I'm just kind of waiting it out because there there are so many hands in the pot that are manipulating the signals for entrepreneurs investments. Really, entrepreneurs are going um, on big signals that are happening on the local level, on the state level, on the national level, on the global level. They're taking all of these signals to whether to invest or not to invest. That's the role of the entrepreneur, is to look into the future. Well, the future is being hand skewed. It's being manipulated. That makes it really difficult to know that this investment is going to be good. Even for seasoned entrepreneurs. Now you bring it back to the you and me level of folks who are getting into entrepreneurship. I mean, you've owned businesses for a long time. I'm newer at it, less than 5 years, or just about 5 years. And you throw someone like me into that and say, everyone's saying, hey, this is going to be successful, and I think I'm interpreting some of the signs and getting good advice, but I don't know how to weather this stuff. I don't have the experience behind all that. I throw my money out there, and all of a sudden business goes sideways. Got to close doors. That sucks. That really
Yeah.
sucks, because I thought I was making a good decision. You
Yeah.
know, so
Right.
times like this, now more than ever, you've got insecurity in the financial world. Now more than ever is a very good time to be looking for places to store your money and to build a warehouse of wealth within really secure locations, like the infinite banking concept. Good whole life companies, good dividend paying life insurance companies that have been around for over 100 years. Look at that.
Yeah. 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 That I almost want to say, oh, I think that we've come to the end of this podcast with that last statement. But there's one thing I wanted to mention. What was it? You had said something at the very beginning here. It escapes me, so maybe it is. Unless you got some more stuff you'd like to talk about, I'm sure we could keep going.
We started talking about the interest, right? And why would you pay 5% versus when you're only growing at 4%? And
Uh,
ultimately, what it all boils down to is, are you going to approach life as a consumer or as an owner? And you have to approach life as a consumer. That's a given. But are you
right.
going to force yourself to step outside of that and approach life as an owner? And if you're willing to do that, do it first with your finances. Become an owner of your own bank, and then open another business, and then open another business. Make another investment. Approach life as an owner, and everything in this world, everything in finances is compared to how everyone else is doing. I don't know how Nelson says that exactly, but that's close enough.
Yeah.
Um,
Yeah.
you will get ahead. You will get ahead. It won't happen right away. It's taken me
Right.
5 years, and I'm still here struggling and trying to figure all this stuff out. But
Yeah.
my mindset has been shifting for 5 years, and I can tell you now I'm more confident than I used to be, even though I'm in maybe a worse spot than I was as just a consumer. Um, I not necessarily in a good spot, just because of life happens and failures happen, but my mindset is in such a better spot. I
Yeah.
know it's just a matter of time to get there.
Yeah. You're having more of a prosperity mindset,
Mm.
that there's infinite possibilities.
And do you have a prosperity mindset when you're thinking 4.5% versus 5%? Is that prosperity?
Oh, yeah. 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 Hey, I do remember what it was that you talked about. You touched on. I mean, we almost glazed over it. It was so quick. But there are people that would say this doesn't work. It didn't work the way this gentleman that approached me at the farm show, because he had been misinformed. And I'm not blaming the agent. He might not have known himself. Maybe he heard it from somebody else. So people will say, that's just a scam. And I can tell you, like you were pointing out at the very beginning, you were saying things that are not the truth don't last.
Mm.
That's kind of like what you were touching on, right?
Yeah.
I think that's what you were touching
Tricks
on.
and gimmicks
Yeah, tricks and
are
gimmicks.
short-lived.
The tool that creates becoming your own banker has been around for hundreds of years. How is that possible that it would be a scam? It boggles my mind that somebody would say it's a scam. It's understanding how to use the tool with your mindset.
Yeah.
Being the consumer and being the banker at the same time. Anyway, that's about all I got.
Yeah, I think that's a wrap, man. That was a real fun conversation to have, and
Yeah.
I'm thankful for you starting it out with that story. And boy, golly, when you start getting into all this stuff, it just opens up more and more cans of worms, and there's so many great things to talk about. And I just love that we can share our passion for all of this with other people. And I just wanted to say thank you to you for investing in this guy's knowledge. He already has his policy.
Yeah.
There's a likelihood that you're never going to see a profit from this customer. And you still take the time, even in your pajamas, to answer the phone call and walk through all this stuff with him because you care about his mindset. And that speaks to the character that was in Nelson. And it's not there for everybody. And so I just want to say thank you for continuing to carry that on and doing the right thing no matter what.
Thank you, Kyle. Thank you, Kyle.
Yeah.
It's not the way I think about it is we're not doing this for ourselves. Even though we are doing it for ourselves. When we talk to our clients, we're talking about them, right? But I'm thinking of it as I'm doing it for myself because I can live with it now. But once I'm gone, because I'm going to go, I'm really doing it for the people that have yet to come. That I don't really have. You can't take it with you, right? Everybody knows that there are bigger things than just the idea of building capital and all these other things. But what the capital does for you, that it can fund your daughter's wedding, it can fund your daughter's education or your son's business that he wants to start. These are things that we have no idea. So I want to talk to people about it because I want to hand it. Nelson and all the other practitioners that are at the NNI have done it to me, given it to me. And now I'm giving it to the next one. It's like what do they say? Handing the baton.
Passing the baton, yeah.
Yeah, passing the baton. That's really what it's about. That's why, hey, find something you love to do and you'll never work a day in your life. And that's kind of how I think about it, is that I want to help because I've been helped. So thank you for saying that. Yeah. But it's really that other people have helped me and continue to help me.
Oh, I agree with that.
Like the guy that came into the booth.
Yeah.
Unbeknownst to him, he was helping me. So
thank you for joining us on the Sound Banking Podcast. If you're listening on YouTube, make sure to like and subscribe and click on the notification bell. Otherwise, join us on Apple Podcasts and Spotify for more content.